Hi, this is Atmir with the best of 2024 to date edition of the Bulletin Board Heroes. Couldn't resist looking at the AIM market. This is the FTSE AIM All Share. We've never read so much rubbish spoken about this market all over the financial papers and beyond as well. It's ironic that I suppose just when we are at peak doom, we are breaking out through 770, as we did at the end of last week. We've got a rising 50 and 200-day moving averages and looking for up to 850 perhaps as soon as the end of next month. That's obviously a punchy call, but given how bearish everyone is about the market, or the conventional thinkers and writers are, that could be the place for this to go. In terms of the downside, if in the unlikely event this market fails, which would obviously be a great shock, then 745 is the limit there. That's the floor of that rising trend channel from August, on which the hopes and dreams of small cap investors are currently based. Maybe onto the stocks which did us proud, or have done us proud in the first few months of the year. First one was E-Star, where you can see the unfilled gap to the upside through the 50 and 200-day moving averages. That happened at the beginning of last month, and we managed to hit not only the first target there, 2.9 pence, but the second one almost on the nose at 4.4 pence. Hopefully we'll have further upside there on this. Really looking for 5 to 6 pence over the summer, as maybe news emerges regarding a potential sale of the Verkuba copper asset. In terms of the downside, not looking for anything lower than 3 pence, ahead of that 5 or 6 pence potentially by the summer on E-Star. Next up, a stock which wasn't really a sort of a short-term, or isn't really a short-term charting situation, but the good news with Filtronic is that we did have the unfilled gap to the upside. Well, in fact, we had ones in October, bear trap gap reversal, and then a gap back in December and in January. So that did show that the momentum was there. And then before the big push up to our target there around 50 pence, we had another bear trap gap reversal. Current situation is that we are looking for, or have been looking for, a fresh leg to the upside, maybe up to 70 pence. Perhaps that's for the summer and beyond, and ideally we stay above 40 pence and the 50-day line area in the meantime. Frontier is next. I think I looked at this yesterday, but it doesn't do any harm to look at it again. Here we've got a rising trend channel base. The excitement here, the technical excitement here, was the gap down that we had back in November, and then the gap higher for the start of April. That's what I call a bear trap island reversal. So you're gapping down to new lows and then gapping up off those new lows. I don't think anybody else has that particular setup in their mind. Obviously, the island gap is one thing, island reversal is one thing, but bear trap island reversal is, I think, something fresh. The view here is that above the 200-day line, currently at 225, we're looking for the top of that rising trend channel base, or the upper parallel of that one, from back in November, December, up to as high as 334 pence, perhaps by the end of next month. And if we're lucky, it should be by the end of this month. GCM was a riser earlier this year, near vertical takeoff back in March, and the sweet thing about that was the way that we had what I call a gap close buy signal. That was on the 29th of February, so we closed above the top of that early February gap there at 2.7 pence, and basically it's been up all the way, apart from obviously the consolidation that we've had since March. Ideally, there's no price action here now, back below the recent support. Let's call it 6 pence just to be safe. We're looking for an end of day close back above the 50-day line at 6.8 pence, and also for that rising trend channel to be re-established. That's probably the last line there around the 6 to 6.5 pence, the last chance for that to revive itself, and for the shares to head up to 14-15 pence at the top of that rising November trend channel, but has been admitted looking a little bit tired now after the flurry that we had back in March. Can't resist looking at Helium 1, which, although has gone quiet of late, still just about in that rising trend channel from the beginning of the year. We're still looking for the shares to have a push back above the 50-day moving average. You can see that since early March, The 50-day line has perfectly covered the price action. That 50-day line currently around 1.5 pence, and want to see an end of day or a weekly close above 1.5 pence to revive the recovery here since I think the last fundraise that the company did. And above 1.5 pence, looking for obviously the 1.75 pence area, which has been blocking resistance. So we can get through that. Then there's a chance maybe over the summer to get back to the dizzy heights of February's 3.5 pence resistance there. Stop loss and a pretty hard one here, really, an end of day close back below a penny, which hopefully won't happen. On to Harvest Minerals, which I hardly looked at all, but here we have it as a potential turnaround situation. We had the triple gaps down back in the summer of last year, and the turnaround here, I suppose, started with the break of resistance around 1.3 pence. That's now become new support. We had a target there at the top of that last gap there, around 2 pence. Next target was obviously the second gap there at basically 3.25 pence, and we're looking for a retest of that while we're above the recent support around 1.75 pence. That was also resistance back in March. Moving along to a company which I interviewed just last week, and which seems to be, I suppose, the exception proving the rule in terms of the explorers in the moment on the London market. Not a very popular asset class, but here with Kavango, the main sort of highlight was the break of that 0.92, 0.94 area, which was the old February to July support for this market. Initial target here was 1.37, which we managed to hit. Best case would be up to 1.65, but obviously we've got to chew up the recent 3 million placing that the company did. So ideally we stay above or on the right side of a penny prior to a move to 1.6, 1.7 pence. On to Powerhouse Energy, which has actually been quite quiet of late, but we join it just currently bouncing off the 50-day moving average around 0.92. Ideally, we stay on the right side of the recent support, 0.87, and that gap there from March, above 0.87, still looking for 1.3 or 1.4 pence. One of the surprise rises of the year, given that it was pretty comprehensively beaten down at the end of last year, was Seraphim, and here the clue that we were rising was helped by the triple gaps to the upside. Current situation is that we're consolidating within that rising trend channel from September. Top of the channel there up to 75 pence, and we're looking for that perhaps as soon as the end of this month, while we remain above, or while now that we've broken through the 65 pence March resistance. Ideally we stay on the right side of 60 pence, I think is a fair thing to say there. On to Triad, which I also hardly looked at all, but what a great chart this was. Here we had the shares basically bouncing off a rising 50-day line for the November-December period, but the gap close that we had back in November, really the giveaway there around £1.10. Current situation is that we've made great progress within this rising trend channel from August last year. Still looking for the shares to head up to 355 pence, perhaps by the end of next month, while we remain above April resistance at £2.62. But that step fashion rise that the shares have got, basically heading to new highs and then going sideways, is one of the strongest patterns in charting, and it looks as though that is continuing. Finishing off with Zephyr, and here we've got this what I call a V-shaped bull flag breakout, sort of complex one, but we've hit our target there twice at that line there from last June. That's around 5 pence above that. We're looking for up to 6.5 pence, hopefully by the end of this month, which would obviously complete quite a decent 3x move for the shares since back in March. That's it from me today. More updates as normal during the week.